What are the lessons that traders need to learn coming out of this, and as we track through what's now being called a crypto winter?
No, absolutely, Dan. I mean, many people call it the Lehman moment, the LTCM moment, the Archegos moment. I would say some of the recent events we saw are not really maybe a Lehman moment, but more linked to Bill Hong's Archegos, or what we had back in the day with LTCM. Is really, again, the focus on the lack of probably risk management and counterparty risk that was done. Today, if you ask, I think a lot of the crypto hedge funds, one of the problems, probably, for example, was that there was not as much operational due diligence done, or due diligence on some of the counterparties. And these are some of the elements I expect to change over the next couple of months. Some of them will be driven by the industry players, but I think others will be driven by regulators as well. One thing we saw before the collapse of some of these players was that regulators were already looking at some of these players. In the case of Celsius, for example, state regulators from New Jersey to Texas to Alabama to Washington were already focusing on Celsius. And this is something I think we're going to see over the next couple of weeks. When it comes to the case of Three Arrows, one thing that we saw in the traditional hedge fund space was actually increased disclosures. And I would not be surprised, for example, in traditional space, we have something called the ADV filings, where hedge funds have to make public some of the assets they own. And I would not be surprised to see the same thing right now in the crypto hedge fund space over the next couple of weeks and months. And now regulators have the ammunition to push for it.
And Henri, I know you have been an advocate for more regulation in the past, something you've been crying out for in the crypto industry space. Had better regulation been in place, would we have avoided the type of blow-ups that we've seen in this sector and this magnitude of price decline?
It's a good question, Dan. I'm not sure if we would have been able to avoid it. I mean, a good example is we still have blow-ups that happen in the traditional space, despite all the regulations that we have. But one thing I would say is that overall, the crypto industry, to the surprise of many, actually wants more regulation. For many years, the crypto industry was one of the few industries that was lobbying for more regulations, for the idea to have a level playing field where we have proper governance, we have transparency, and we have a fair, level playing field that our players can operate. One thing I hope that we would see over the next couple of months and years is that a lot of these players, at least there are some regulatory frameworks, and there's not much arbitrage that can be done. For example, but there will still be incidents. In the case of Three Arrows, you saw, for example, yes, they had some kind of regulatory regime in Singapore, but by and large, it's reported that they were only trading their own capital, which is not dissimilar to a lot of family offices or prop shops that we have in traditional space. However, I think when it comes where the protection will be much needed is when it comes to retail investors. In the case of a lot of these lending platforms that we have in the market, where I expect actually that regulations will be helpful, not only on protecting on the risk management side, but also on the way they can market themselves and what promises they can make to investors. And that's an area I think where regulation will be much welcome, not only by investors, but also by the crypto community as well.